Good morning, my dear family and friends. Today is Saturday, May 4th, 2019, and I wish you all a wonderful weekend. And I'm happy to continue our discussions on swing trade to financial freedom. And this, I think you're going to like it a lot. We're going to discuss Heikin Ashi Candles. You probably never heard of it. But I'm going to show you how you can use them to make your trading really simple and as well as powerful and successful. But please keep in mind that what we discuss here is for educational purposes only. And my hope is that by having this discussion and this education, that you can also really make your learning curve very short. And I really encourage you keep a diary so you can see your progress going forward. And soon we're going to actually start doing some demo trades, and it would be nice for you to also keep track of demo trades and do them as well. And so you can see how many of these trades are successful. And that's how you build confidence. And once you're 70% plus successful, then we'll talk about doing maybe live trading with a small amount of money, and that you can actually afford to lose. But that will help you to begin to see how emotions kick in as soon as you see money there going up and down, and so that becomes very important. But please keep in mind that everything that we discuss, we look at charts. It's called chart analysis or technical analysis. We're doing it based on what happened in the past, and it may or may not do the same thing in the future. That's why it's so important to always know about the stop losses and understand when to exit a trade. Our goal is always to have setups that give you a really huge profit compared to the potential loss. So, and we want at least to have 70% plus successful trades. So please then read this notice and always keep in mind that when you trade, there's a lot of risk involved with it, and you can lose some or all of the money you have in that account. Sometimes you can even lose more. Depends what you're trading and how much leverage your broker is giving you. So let's continue. And so then I'm going to share with you about Heikin Ashi Candles. And you can see here, these are Heikin Ashi Candles, and these are regular candles. And the difference is Heikin Ashi Candle, when a new bar begins, it's going to take the last bars, open, close, high, and low, add them up and divide them by 4. And so then it's a little bit more conservative than the regular Japanese candle formations. And I will continue to discuss these candlestick formations also on the regular Japanese candles for those who like to learn those. But you're going to begin to see that with the Heikin Ashi candles, a little more conservative, but then they really work very nicely. And all you need to do is just basically begin to notice these candles, and when they change, that's when the time you want to start looking to get into a trade. And what they do for you, they actually take the noise out of a trade, you know, and so with regular Japanese candles, you can see here you have for example, a gap, another gap here. You see ups and downs, reds and greens, but here you can see, they're nice colors, no gaps, and then basically you want to stay in as long as it's green and get out when the color changes. And what we're going to do, we're going to look at charts and look at different trades and setups, and you can see how I will look at them. And please also feel free, if you want to come online on Sunday night, send me an email, and I'll send you the link, and we can discuss any questions you might have online as well. So let's go to some charts now. So here we are. This is our Thinkorswim. As you know, I like Thinkorswim a lot. I'm not associated with them, but they provide really nice charts and nice indicators, and all the feeds are free, so we can look at any financial instrument that we like. And I always like to start with looking with the Standard Poor 500, especially the futures. Of course, you can use the ETFs, but futures are, especially if I'm looking at night, I can see exactly what's going on with them. And if you have noticed, and we're going to talk more about this, but this last Friday was unemployment report. And normally I try to stay out of trading when there's a special news like unemployment report was on Friday, and we had great numbers, and market really took off. And also on Wednesday, they were talking about, the Feds were talking about whether or not they would raise interest rates. So you want to be aware of those dates, and we'll talk more about it. And so you'll be aware of them. And those times you want to be staying out of a trade. And also, when a company share about their earnings, and this is actually a time that that's happening, and a lot of the companies also providing earnings reports. And so if you're looking at a specific stock that has a earning reports like the next few days, it's good to stay out of it. So here, as you can see then, here is our 1 year weekly. Here's 3 months daily with regular candles, and here is 3 months daily with Heikin Ashi candles. So we look at the weekly, and I see I don't have my monthly here, so I can show you the Heikin Ashi candles. But also remember, we only work with stocks and financial instruments that have really great monthly charts, and so we know there are great monthly charts, and so we don't really have to have them all the time, but it's a habit for me. I enjoy looking at them, but now we're just going to look at the weekly and daily. And so then, as you can see on the weekly, it's been going up very nicely. You come here and look at the Japanese candles, and you see that we had a high here, made a low here, but now it's going back high. And if he breaks this high here, then it's a good chance we'll continue going higher. And so then, we have a high point, and we're actually we do have a high point. We have two candles here, but we only have a low point. We don't have a low point yet. We have only one candle. But basically then, if he breaks this up, the chances are market will be going higher. If he comes back and break this side down, market probably go lower. Now, if you look at the Heikin Ashi candles, you can see here, we did have a red candle here. They don't quite look red, but let's call them red. And this one here, as you can see, has a very small body. We call them indecision candles. And you can see, the wick went up and came down, and it closed right in the middle. So that's indecision candle. Now this one here, it really looks more bearish, and you can see there's no tail on this side on the top, and there's some tail on the bottom. And the way we look at this, if the tail is smaller than the size of the candle, then this is a bearish candle. And now remember, we talk about three ways of trading. One is if we create A here, and then we have bearish candles to get in at that time, which is more aggressive. The other one is that when we create a B and it goes up to a point that creates a C, then again we can look for a bearish candle here to get in. And the third one is when it comes down and breaks this B. And as soon as it closes below this, if the next day goes lower, then we want to go lower with that. And of course, we do that once our weekly is at plus minus 1 to 2 standard deviations. Now, I'm showing you going short, and we're going to talk about going short with forex, and we can do it with options. But I want to get used to the idea of that you can trade both ways. You can make money when the market goes up. You can also make money when the market goes down, and also that shows you when to exit a trade. So then, if we were going to be aggressive and go short here, then this tells me, yes, this is a good time to go short. And the place to go short would be as soon as it opened up, which would have been here. Of course, our stop, where we would exit if it goes against us, would be right here, right above A. So let's continue looking at charts. Here, let me start with WBA because normally we like to see when the market drops to 1 or 2 standard deviations. So here, this is Walgreens, by the way, WA. So then here, what we look for, then we want to go long, is that our weekly is dropped to 1 to 2 standard deviations. So if you look at here now, you can see that it has dropped to 2 standard deviation. Actually, it dropped to 1 standard deviation, went up, and came down again. And this is the risk when you try to enter more aggressively as soon as it reaches 1 or 2 standard deviation. So here, it was bullish and went up, but it dropped down again. And so, if you want to be conservative, then you wait till you create A, B, C, D. You have what we call the uptrend is created, and then you look to enter. But also, I'm going to show you sometimes they really take off, and they can go on for days before they doing any retracement. So here then, we do have, this is actually a bullish candlestick formation. This is called the inside day or pregnant lady. So we had a red here with a green inside of it. And we look at the Japanese candles, and you can see it really don't have anything here. The candles are small, a lot of indecision candles, and so it really doesn't give you a good idea to get in. But then next week, because of this weekly setup, it may continue to go higher. Now we look at Heikin Ashi Candles, and you see the same thing. They're pretty small candles, and so some people actually get in with a Heikin Ashi as soon as they have a green candle, whether it's small or not, whether it has tails or not. But then as we look at different setups, I'll show you, different ways you can get in. And so here, then we need to wait on that. Now, let's look at another one here, MDT. And here, as you can see, also came down to 2 standard deviation. For that matter, you can see we had another weekly here, 2 standard deviation even before that. And so this is a good indication this may go back up because we're at 2 standard deviation. The same thing happened before. And sure enough, we had a really nice, strong, bullish candle here. As you remember, this is an engulfing candle. And sure enough, then this week has been going higher. So if we look at the Japanese candles, and you can see here, we had a nice drop, but then it pulled back up. That by itself is a bullish signal. And then you have this candle coming in, and you had a big gap here. That shows a strength. And so that becomes a nice bullish candle. And then you can see it's taken off, and it's been going up now for, almost 2 weeks. And now let's look at the Heikin Ashi candles, if that makes it easier for us to get in. And again, here you have a nice tail here. So that's bullish. But then you had another bearish candle here. So we don't trade. Then you have an indecision candle here. Like I said, some people may want to get in at that time. But I may or may not do that based on what I see here. But here, like I say, it's bullish. So that would be a good idea if you wanted to be aggressive. The next one, as you can see, but also you can see here had a big tail or wick on top, so that's kind of bearish, so I probably would not take that. Again, you can see the next day the candle also has a big wick here and a big wick here, so you wait on that. The best entry is a candle like this. Please pay attention to it. There is no wick on the bottom. There's a little wick on top, but it's not the same size as the body. So that means this is your best signal for a good conservative entry. And even though we have A here, we don't have B or C or D. If you wanted to enter, this be the time to enter. That means as soon as you have this candle, the next day, you just put it at price that he closed in wherever it was, and it's going to open or put a penny above it, and it will take you in. And it's been going up now then for, almost over a week. And now, of course, then we don't have a B yet, and you can see it's reaching overbought 1 standard deviation on daily. But the wick is very strong, but it may start coming back down. I may continue going higher. So as long as it's green, you can stay in the trade. And the only time you would exit that, if you get a green with a wick larger than the body, that become a good time to say, okay, I had enough, get out. And if you don't see that, as soon as you see a red, then that's a good indication to exit. Of course, it may go back again on the same direction, but that's okay. We've already gone from down here to up here for a great profit. Now, once it comes down here and we have a B, again, when it comes to C, because we had such a nice trend here, then to me, C be a great place to look to trade. And then again, as soon as you get a green candle here, that gives you go ahead, you can enter in. And of course, the next would be to do enter trade here at B as soon as it breaks B, but you can see it's pretty up here now, so I would not take that trade. So what I'm trying to do is show you, there are different options for trading, and as you get more comfortable, as you can see different patterns, then you can make your choices accordingly. And so let's look at a few more. Here's Apple, for example. And Apple, as you can see here, has had it came down here to 2 standard deviation, and it's been going up very nicely. And so on the daily now, I'm trying to get my, okay. So on a daily now, you can see, we've had some retracement, and every time we had a retracement, here was a nice gap up here, made a high, came lower here. So we've already passed the time to get in, but if you were down here, we're first looking at it here, this was a point here. If you put a line here at this top here, so now we have an A, now we have a B, we have a C. So here you could have taken the trade at C or waited to break this and close higher, which happened here. So if you got in, had a retracement, this happens. But then if your stop is below A, and that's where a safe place is, it's not always the least expensive, but it's the safest in the sense that you probably wouldn't get hit. And sure enough, you can see here now it's been going sideways for a long time here. And so when he breaks this time, you can see it has a nice move going higher. And then now you have again, you have your A, B, C, D here. And now you're going to have a new A, B, C, D. And by the way, we talked briefly about Fibonacci's. We're going to talk more about them, especially as we start taking trades, demo trades, as we see setups. But here, for example, if you're using your Fibonacci extension, you put it down here, you bring it up here, click it, bring it down, click it. And remember, we talked about from here to here is the same as here to 100%. That gets hit more than 80% of times. And you can see here, it can hit it and it's right there. And the next area that might reach is 127. If we pass that, go to 161.8. So now we have our extension set up as well. And we have an idea how far it may go. And so we don't get out too early. Now, if we have the Heikin Ashi, it would help us to stay in. So here, uh, for example, let's say you were looking at this here, you didn't get in at this point, which you could have got in at this point here, but it waited here to come down here, and now it made a C because you have a strong uptrend here, so you can get in at C. So you wait for a green candle. This would be a nice green candle here. That would be your entry. And so you want to see how far it may go. So you put the Fibonacci on it, and let's try and do it again so you can see how I did it. And so you come here where it says drawings, you left click on that, you come to drawing tools, and let's do that again, the drawings, drawing tools. Here's Fibonacci retracement, we haven't discussed that yet. Here's a Fibonacci extension, so you click on that, you start from A, this is your A, you bring it here again, you left click, bring it down to the lowest point, left click, and it'll start it up for you. And of course, if you click on this line and edit it, and then here you can set it up the way I like it if you like, and you can save it as default and say OK. And now every time you set it, it'll show you exactly all these important levels. 100%, like I said, it gets hit a lot. After that is about 70% of time 127, and then less than that 161.8, and sometimes they even go to 200% and 261.8 as well. Depends how strong they are. And so let's look at, for example, another one here. This is Abbott, and again, we always start with weekly since we know the month is great. And you can see it came down here to a standard deviation, went up, it came down here to a standard deviation, had a strong wick here, and it's possible may go higher. And if you look at daily with candlesticks, you can again see here we had a nice bullish candle set up here and took off from that point. And so this is a really nice setup here. And now it made an A and it's made a B. So then, we can look to get in either when it breaks this high here or try getting at this point when it makes a C. So let's look at Heikin Ashi and see what we see here. So Heikin Ashi here, all right. So here again, as you can see, we had a nice setup at this point here. This is okay too, but it's about in the same size, but that's still okay. So you could have got in this point, you could have got in this point here. And now we are at the mean at this place here, which is the average price value. And we had a red, now it's green. So if you were in it, I would have stayed in it. I would not have exited. But then if we put our Fibonacci on that, now of course it may come down more, but we do have A, B, and we do have C at this point here. And we really don't have, well, we have A down here, B down there, and C down here. So then, so either a person may say, oh, it's green, let's get in, or you wait for the better candlestick formations, or you do the more conservative one, which you put a line here, and as soon as breaks this and close above it, then you can get in. Now, sometimes as soon as it breaks it, if it has a lot of momentum, it can just break right through it and go higher. So it's your choice if you want to place a entry point here or just wait for it to close. Uh, and so then this make a potential for trade. So right here then would be an entry for next week. And let's see what else we can look at. Let's look at gold. Gold, let's clean up the lines here so we can see what we have. Here, as you can see, came down to a standard deviation, and the weekly has been going up. Now it's at 2 standard deviation coming down. And so if we study the week, you can see here was a high point, this was a low point. And also you can do the same thing, with the weekly as well. If you have a good setup on the weekly, that's excellent. So even here, then we can set up our Fibonacci. Here we go. Fibonacci extension. So from A to B to C. So as you can see, it's already getting close to the 100%. But you can see 127 is one standard deviation, and may even come down to around 1-2 standard deviation. So then if I was short in this, I'll probably just hold on to it because this tells me this is my my target. Now, if you look at the daily, as you can see here, it's come down here to 1 standard deviation and looks like wants to go higher. So then this is possible. It's going to go back up before it comes back down again, and that's what it looks like. Now, let's look at the gold here on the Heikin Ashi chart. As you can see here, it went up there to a standard deviation, and then here we had a nice bearish candle with a short wick, so this would have been a great entry, and it come all the way down here. Now we have a green. This is a nice strong bullish candle with no wick, a small wick on top, so this would have been a great entry right here. Now here going up, let's remove these drawings. Now, if you want to be more aggressive, you can also trade these ups and downs with a day, but I would rather see, if I was going to go long, I would rather see this comes down all the way here like it did before, then it start going back up. But then you will notice, especially if you have time to look at charts more often, and you want to, do a 1, 2, 3, 4 days, weekly trades, not a long trade like we do with the day normally for we want to stay in there for days or maybe weeks. But then this would have said here, I'm oversold here, and here you had the bullish wick as well here, so it shows me it's going to go up, it's going to make the B at this point, so this would have been a good entry. And then as soon as you have a bearish candle or a red candle, you exit and you had a nice profit. And so let's see, Home Depot, for example. Let's see what Home Depot is doing. Okay, now again, let's get rid of the drawings. Now, look at the weekly. It's always good to study the weekly. We had a high here, $215.43. You come back up here, almost the same area, at about 2 standard deviation, and you do have a bearish candle here. This is a small body with a long wick, and so this is an indecision, but to me, it's actually very bearish. And so here you could have actually start going short at this point right here because the week it has a nice setup. Now, if you try trade with the day, with the Japanese candles, you can see here you have a high, you have 2 indecision candles, and by the way, if you have an indecision candle on top, you can basically go short as soon as it goes below that. But when it's on the bottom, when you see indecision candles, you want to wait for a good solid bullish here, which we did not get it here. And so then this showed me we should go down. Now it's creating A, B, and can go up, make C, and go back down again. And so here on the Heikin Ashi, as you can see, makes it easier. Uh, okay, so here we're up here. We had an indecision candle, and again, as soon as you have this indecision candle, you could enter it. If not, you had a good one here, you could have entered it here. And now it's going to create, looks like it A, B, may go up to make C, and then come down. So where would you trade it? Well, again, if you were aggressive, you could have traded here. If you're less aggressive, you wait for this retracement, and it has created two candles. So here, if you get a bearish candle, you could look to trade, or if you're conservative, you wait to break this and go further down. By that time, we're getting pretty close to one standard deviation minus, which last time made us go higher. But it's possible now it's going to do that and go further down because the wick is still way up there, and so the wick is going to do this. And so on the daily, we're going to go up and down with it. All right. Let's look at Google. Google had earnings, and what's nice about Thinkorswim, you can see the earnings right here. So then, if you look at it, when they had the earnings here, you see you can look at it. The actual was $11.90 per share, and the expectation was $10.97. So they did really nice, but apparently they may have said something in their projection for future. And so what happened, look at the big drop. You can see on the weekly, huge drop here. And that's why, you know, you want to stay away from earnings reports. You never know how people are going to respond, even to a good earnings. However, again, our way of trading would be if you're going to buy, we wait till it comes down here. But again, as you get better with trading, you start seeing things. For example, this is a huge drop. When this happens, people are going to come in and buy some. And so then if you look at the daily, Japanese had a huge gap here, and often these gaps get filled up. And also you had now a nice bullish candle here. You can see a little gap, shows power, bullish candle. So then this to me tells me it's a good chance it's going to go above here on Monday. Okay. And so then you can, you know, write this down. You can see it. And now, if I was going to trade this, you know, demo trade, I would come here to says trade, as you can see here. We'll talk more about this later. Just since we're discussing it, I'll show you. And here it shows me these are option chains here, and so here we want to trade Google, and it shows me how much it did on Friday, and so here. Now, as you can see, of course, this is a very expensive stocks, $1,100, more than that. And so we normally do this with options here, which we're gonna discuss this in future. But then if you're gonna buy something here, it says ask, you come on ask, and there's a bed here, and you go on ask and click on it, and you say buy. All right. And then it puts it down here for you. It says buy stock. Here's the stock, which is the Google. Here you can decide on the shares. It's 100 shares right now. You can make it less. But it looks like right now it's set up minimum 100. But you can buy 10 shares, 25 shares, what have you. And then here it says limit. That means that's the price you want. But also down here you can see there's a midpoint and natural point. So I always like to go on the midpoint. That means the difference between buying and selling. So if you bought this today and sold it at the same time, you can see you can sell for 1188.62, but you're buying it for 1189.80. So by putting it in the middle, you say, okay, I'm willing to buy it in the middle price. I'm not going to pay full price for it. And then, of course, you can confirm and send it. And so let's do that. And then here hit send. And so then when market opens, it may take me in, and then we'll see what happens next week. Of course, I may not stay that long in it, but this is demo trade, so I may just uh, look at it or leave it alone for next week. Now, to go back to charts again, you go here, charts, and here we are. Now, again, based on Japanese, I do have an entry point, but based on my Heikin Ashi, I do not. This is still red, and so here it's like I said, more conservative and gives you better trades. So then I would wait for this to take to give me a nice bullish day here, and then to enter. Also, you can see here once you set up your limit, it's going to put a line here for you, and so then you know let's put an arrow here so we know if it goes in. This is where we got in. Where is the arrow here? Okay, here's an arrow. So we want to get in at this point here, and more beneficial. And I'm also going to discuss weekly trading with Forex for you. Maybe I do that next time. And that way you can actually trade with Forex, which allows you to trade with a very small amount of money as well when you're ready to pay to do live trading, which I encourage you to do it that way. And so thank you again. If you have any questions or you'd like to join me Sunday night, please let me know. Take care.